Hey guys, Mike here. So today we get to answer all your questions and comments, and you had a lot of really good ones. So some of these I'm going to put out there to you to actually answer, and we'll see how that goes. But we'll be talking about as far as like stock splits, how they affect the stocks and everything, how they affect the movement of the stocks, the call sweeps. I'll go in detail on that one because that's something you're seeing a lot of right now, and I think it's really had a huge effect and will continue to have a bigger effect than it's ever had. This is what you're seeing in semi stocks, and then a whole lot more questions about, is this a real bull market or not? So we'll talk about that. So feel free to participate in the comments here. And as usual, let's dive right in. And so the first one actually comes from one of our members, and I appreciate the extra love there. He's a great supporter of the channel. And it says, quick question for you. Let's say a stock has a certain float, and then, for example, it does a 1 to 2 split. Can it be expected that its daily range would be pretty much cut in half, or doesn't necessarily have to be the case? We do know that more float almost always means a less volatile stock. As you know, I focus on AMD, and this dude's a master at AMD. He's been killing it. Best person I've ever seen when it comes to AMD chart. So congratulations to him. And its float of 1.6 billion. And if you can compare that to Amazon or Google, both have much larger floats, and they move much less and also much slower intraday. This is true. And so let's get in. First of all, let's kind of divide this into two questions, okay? One, he's talking about the floats, okay? And we've been paying a lot of attention to this. You look at Google, about a little over 5 billion, right, in shares outstanding, huge market cap, right? So massive. It's one of the big ones out there. We know how Google moves, right? Amazon, even bigger, right? This is twice as large as far as the number of shares outstanding that you saw in Google right there. But then we pull up AMD and scroll down on this one. You can see about 1.6 billion, right? So way less shares. But let's pull up Meta here, because Meta's a big mover, right? And you see this one right here? This one right here has almost twice as much as AMD, right? But it is a huge mover. And I think one thing you have to understand is not just about the float, as we can tell. It has a lot to do with it. But it also is the stock big in the options market? Is there a lot of call and puts being bought on this one, right? That's the big one, right? And Google's not one of those. When you think about it, Apple's not one, Microsoft's not one, but Tesla, NVIDIA, AMD, SMCI, all these other ones, Meta, I'll show you that one, huge amount of kind of options, right? They have big premiums for these. That can also help it move, which we'll get into that after the break here. And like maybe about 10 minutes, we'll hit that question or something. And so, that'll help answer what we're about to talk about. And that's what you see in SMCI is a combination of that, right? SMCI, super microcomputer, super low float, right? 47 million, right? 52 million shares outstanding, $62 billion market cap. So tiny, but also the fact that traders, what they're doing is they're buying those 1,400 and 1,500 calls like multiple times. They'll run it up, sell it, right? Put it back down, and then they'll run them up again, right? They'll just be loading into those call options, forcing the market makers to do what? Because they're the sellers, have to hedge, right? And we'll get into that. And I found a great explanation for you guys who want to know all about that when it comes to call sweeps and stuff like that. And so I think that answers our questions, hopefully, about that. Now, the other question is, well, what about the movement of the stock once they do a stock split, right? Because we know NVIDIA, if it keeps going like it is, it's going to have to do one. There's no ifs, ands, or buts about it. It's going to happen, okay? And some others might as well. And so when you look at it, we'll just pull up, okay, famous stock splits, NVIDIA, Amazon, Shopify, Alphabet, Tesla, all of these different type of stocks. So let's just pull up a couple and see what happened here. We know NVIDIA was back here in 2021 right here, did a stock split, right? They did a 4-for-1, okay, because they were trading much more expensive. And so usually what happens, I'll say this before a stock split, either sells down before the stock split or right after the stock split. But if you look at this movement, it's up about 48% in 48 days. That's before the stock split. But then you come over to the right and you go, well, look at that movement right there in October. I mean, that was a huge move, right? That was, what was that, 65% in 36 days. So, maybe it really what you're looking at, no. The answer is no. It depends on the stock. It depends on the volume as far as like call sweeps, put sweeps, whatever it is coming in on this thing. And it depends on how hot it is, right? And this is before the semis got like super, super crazy, right? This is 2021. And so, on a daily scale, I'm not going to break this down by day, I don't really think you're going to see it. I think it just depends on the stock and what sector it's in and how hot it is. Shopify, prime example. Remember this one was trading like 1,700 or something like that at one time? It got up to some stupid price. And they ended up doing, what is it, a 1 for 10, 10 for 1 right there? And you can see, I mean, the movements before and after. Not really any different, right? It's still a big mover to this day. And then you pull up Walmart. They just did one. This ain't even a high flyer to begin with, right? They just did this stock split for them, right? And so normally, I think we were expecting a bigger sell if we didn't get it. But it seems to be the same daily movement, right? You look at it, I don't think it's any different. And so I think it just depends on the stock, depends on what the market's doing at that time and stuff. And so hopefully that answers your question. Let me know what you guys think now. And guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. And the next one says here, and I think a lot of us in this boat, what do you do with stocks that have run ups that are now priced beyond perfection? Like, let's say ELF, SMCI, when they had a small PE, 30 to 40, and now they're at 95 to 100 PE, and the thing is priced perfection. It has no more room to grow in the short term because the next earnings report is 3 months away. Long term, they'll do fine. And the slightest bad news could send the stock tumbling back down. Personally, I sold, but I'm wondering what others do in similar situations. And it leads me to a saying I found right here. It says, parabolic markets go up further than you think, but they don't correct by going sideways, right? And Bob Farrell was a guy who worked on Wall Street for a long time. And he came up with like these 10 rules he does. And that was one of them. And when it comes to these stocks, that's what you're seeing. And I'm in that with a couple stocks. And it's a good problem to have. I'll say that, right? I mean, let me know in the comments if I'm by myself. But, I showed one the other day and people got mad because I didn't say the name of it. I didn't say the name of it because I don't want people trying to jump in now. And then if it dumps, trying to like accuse me of trying to pumping up the stock, and so I can use you as, liquidity to get out of it or whatever. That's why I didn't say that. But, it's the same thing. That thing has almost doubled since I bought it in a very short amount of time. And it's like, well, that didn't expect it to go that high that fast. So, and the question is, the real answer is nobody can answer that question for you. But I'm sure a lot of people, what they do is simple. They will maybe take some off, right? Just because they can secure some profit. Some people just keep riding it. They ride and die with it, they like to say. They'll do that as well. Some people will buy puts, right? Some cheap puts or something. So if there is some like move down, the stock loses money, but the puts, end up making money. And so kind of making up for that or whatever. But the biggest thing is, and this is one of those things, like when you have a plan going to a stock and all of a sudden it does this, in the comments, what do you do? Right? You're just going to ride and die with it, start taking the profits. So, put it down in the comments what you do and stuff on that one, because SMCI is one of these. It's coming down. Then all of a sudden they go, oh, nope, S&P, going to S&P, goes back up, doesn't have a lot of shares and everything. And with these kind of moves, we all know when they're straight up like this, eventually there are big movements down. Because what you expect from some of these stocks, and a lot of them are low float stocks, is that they're going to be smart and start issuing shares at these higher prices to raise capital. That's what you're expecting. That's what I'm expecting. And so we'll see if they do that or not. So, and that's when you usually see your biggest drop or whatever. But so anyway, hopefully that helps out there. And I mean, fun thing is I just did this video. If you remember, make sure you go watch this video. But it's called How to Search for Unknown Stocks with Parabolic Big Gains, right? Or possible big gains and stuff. And that's what you're seeing now with these low float stocks especially. And so I think, because a lot of those you mentioned are coming off the Russell 2000 and stuff. So hopefully that helps. And please answer in the comments what you guys do in that situation as well. Might like to hear your take on if you believe this is a real bull market. I'm skeptical at all of the macro data, but I'd like to hear what you think. And one thing I want to say right out of the gates is, the simplest definition, if you actually Google what is the official definition of bull market, the first thing that pops up is this right here. The condition of a financial market in which prices are rising or are expected to rise. That is it. And the question you got to ask yourself is, have prices been rising? Yes. Are prices expected to keep rising? Yes. Why am I not surprised? And so by definition, yes, it's a bull market, right? And we have a bull market way more than we do a bear market. But the reason why I'm not surprised is because when I look in here, and I do this Monday through Friday for members, I look and track the sentiment, and also more importantly, what percentage of stocks are above their 200 moving average, right? On the NASDAQ 100, the S&P, the Russell 2000. And when you look, this is the first time I can remember in a long time, the S&P percentage of stocks above the 200 moving average being higher than the NASDAQ 100, all right? And if I go back, for example, I'll show you. I had to go ahead to YouTube to pull this up because it keeps more of these. But when you scroll back here, this is 3 months ago. Look at that, 39% on the S&P, 39%. NASDAQ 100, you expect a lot, right? It's been above 50 forever because it's tech. Look at Russ 2000, it's doubled, right? And I don't care about the 50 moving average because you can lose that in one bad earnings call. But the 200, that's the one I care about the most, and you can just see that. Also, what have I kept saying for months now? I'm like, track the RSP, the equal weight ETF. If that thing starts to go and we start heading towards all-time highs again, because we had fake outs in the past, that's breadth expanding. And when that happens, the market's going to roar, right? That's what's going to happen. Money's going to start coming out of those big Mag 7s and not as much going in and start going to these other ones and pushing them up. And so that's what's happened. And remember this. I understand, and I track the macro for a reason. I just like to know what's going on too. And understand, like, for example, the unemployment rate yesterday rose to 3.9%. Will it continue to rise? We know, layoffs through the roof, people that don't have appreciating assets, hating life, all that good stuff. But remember, go back and look at any recession on a chart. They will run that son of a gun up. They don't care. The market is not the economy. Look at around the world. You got economies, like large economies. It's telling you, we're in recession, and all their stock markets are at all-time highs. I mean, if you remember that for the rest of your life, remember that if you teach your kids anything about the market, make sure, I know I'm drilling in my son's head, the economy is not the stock market is not the economy, the stock market is a casino. It's full of degenerates, all right? I don't mean that, I mean, I'm in it, so you know what I'm saying? I mean that jokingly, but you see this. Did I show you the NVIDIA chart? You see it Thursday, the video I put out? I mean, straight up, how many weeks? The S&P, how many weeks? 17 out of 19? It's insane. You don't think it can go higher. It keeps going higher and higher and higher. That has nothing to do with the economy. Nothing. And don't also forget liquidity behind the scenes. I mean, you had the Fed president sit there and tell you there's going to be more bank failures right there in front of Congress, right? And yet regional banks are up. As of, I'm recording this on Friday, today's Saturday, right? The regional banks are up right now, right? Even though you got another one who just bought another regional bank failing right now, or they got capital now, so maybe they'll survive. But, again, it's just two different things. And it's the same way when it comes to fundamentals. Everybody's looking at fundamentals. I'm like, dude, the only time fundamentals, you hear them talk about real fundamentals, is when the market's going down. And that's their excuse. They go, oh, that thing's too overvalued. We got to go down now. So that's when they care about it. When it's raging bull market, they don't care about that stuff. They don't care about that stuff. They tell you that. Right, but they don't care about that stuff. But there's a reason why Warren Buffett is sitting in so much cash right now and sold Apple when he did. All right, so he's waiting it out. He can do that. And so hopefully that helps. Let me know what you think in the comments and stuff. And I get where you're coming from for sure. No doubt about that. And the next one says, can you please direct me to how or where you can find the earnings calendar with the company breakdown? Yeah, you just go on Twitter right here and go to Earnings Whisperer. They send it out usually on Thursday or Friday. And so I use that. If they ever stop putting it out, I'll have to find another source. They also have like paid things you can use in there as well. They give you a lot of detail and stuff. So that's where I find it. Hope that helps. Now, next one here from Paul says, what do call sweeps do and how do you track them? You can go do it on Cheddar Flow. What is it? Unusual Whales or something like that is another one. There's plenty of them out there. But this person right here put the best description I've ever seen. About 4 years ago, he put this in here because Tesla used to go through gamma squeezes, right? I don't know if you ever used that term before 2020. But when you read about this, I'm just going to scroll down to how this happens. Here's what happens, okay? Someone starts by buying way out of the money calls. This forces market makers, and market makers are the ones that sell us these options, okay? So they're the sellers, we're the buyers, that kind of stuff. And we're selling, they're buying too. But right now they're selling, okay? So that forces market makers to buy the stock to hedge their calls initially, right? Which moves it only a bit up. Then you get good news release. This used to happen all the time for Tesla when it was raging, right? That forces algos who trade news to buy stock. The original out of the money calls are now closer to at the money due to the gamma, right? Market makers have to buy more stock after seeing the initial move. Now retail is piling into the calls due to FOMO. Shorts are buying back stock and buying calls to hedge too. This causes market makers to now desperately buy more stock to hedge. Then the cycle repeats, and then the stock price goes to infinity, okay? And so I hope that makes sense. And if you didn't believe that, the reason why I told you the last 2 weeks about NVIDIA, what was happening? Anytime you saw weakness, what did they do? It was either some new chip came out, or more importantly, we're giving it a price upgrade. To 1,200, 1,500, every time for those 2 weeks. And what did that chart do? Whoop, 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 whoop. Call sweeps flooding in every day by the millions, right? Market makers who sold those calls are having to hedge by buying the stock. People still try to short this stock, which is unbelievable. I mean, eventually they'll be right, but there's a reason why it's cost short sellers more money than any other stock over the last 2 years. And of course, what happens? It just goes up. And then, of course, people FOMO in. Don't forget that. And so hopefully that makes sense to you, but that's what you're seeing happening with SMCI. You're seeing it happen with NVIDIA. AMD went through it a few days ago. So that's what you're seeing. All right. Now, this one right here, I hope you guys can answer this one. Mike, when you use the RSI indicator, what period do you use? Most charting services default to 7 days. I use the default. Okay, let me be very clear on that. But it goes on to say, if you're a longer-term investor, sell, flip every 1 or 2 years, should we change the RSI variables to help spot value better? Or can you tell from the question I finally misunderstood this indicator? So in the comments, if you happen to change these defaults, if you're a longer-term investor, please put in the comments how you do it, and then I will look this person up and forward them your comments in case they don't watch the video. Now, a couple here from one of our members named Dr. Marcus. Is there another semiconductor stock that has the potential to take part in this AI craziness that hasn't already blown up? I missed out on AMD, NVIDIA, and all the rest of them. This is one I'm going to put to you guys as well. Put in the comments which one you think and why you think this is. I mean, the ones he's got listed are obviously the biggest potential and still got probably a lot of potential actually. But again, it'd be nice to get a pullback in some of these like Taiwan Semiconductors, which had a big move and stuff like that. And then I know Intel has a lot of government contracts. But again, I want to hear from you guys. And then we'll end it on a fun question again from Dr. Marcus. He says, what is the hardest / worst part about running a YouTube channel and Discord? And there isn't many, to be honest with you. YouTube channel, I'll tell you the worst thing if you're ever going to do it. One, income from YouTube is very erratic, right? And then the holidays is great, and it'll drop off a cliff when you come into January, February, March, and then they'll change policies, and of course, if it'll affect your income. So depending on that, that's tough. Plus, you gotta have thick skin because people in the comments and people are going to email you all kinds of crazy stuff and say crazy stuff about you, and so you gotta be ready for that. Discord is really nothing besides the fact you gotta know how to use it. I mean, I'm not a Discord expert. That stuff right there. The biggest thing about Discord is the scammers. That's the biggest thing, and Discord won't stop them. Like I've tried. You can't even hardly contact Discord. I've tried calling. I've emailed them 1,000,000 times about it because people try to impersonate me. They do it on all the Discord channels and stuff, but they just don't stop them. And I mean, it drives me nuts. I can't stand it because some of these guys, I mean, they act like they impersonate you to try to get your members to fall for it. And some of them do. I don't know how many times you warn them. Mine, when you sign up for our membership, it's actually right there. And the first thing you see is supposed to be saying, don't fall for scams. But it's sad you got to put that in there. But they, I don't know why in this day and age, in this age of technology, they can't stop scammers. And I've banned a bunch of them. But it is what it is. I mean, so that's it. Besides that, great people, enjoy it. And again, that's about the only thing I can think of. And so that's the worst thing you think of. Everything else must be pretty good, right? So appreciate that question and everything. Shout out to you for all the support. I really appreciate that. And so, guys, hopefully you can answer some of those questions in the comments. Hopefully some of the things I said answered the questions you put in here. And feel free to put any more you got, and we'll put them in next Saturday's video, or maybe I'll answer them throughout the week or something. So hope you guys got something out of it. Hit that like and subscribe button if you did. Really appreciate it. And I'll see you guys later.